Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago, bringing you some afternoon commentary here on the energy markets. So let's get started here. Crude prices are quite a bit firmer here. We're up a little over 3% right now. The May contract trading around $49.23 a barrel. It's up about $1.72. And we're really seeing a bit of a turnaround here. We had a bit of a weaker tone here this morning. We were down around $47 a barrel. We've seen the market kind of lift up. We've got the Brent also firmer, up about $1.40. Nat gas touch weaker, down about 5 to 6 cents. Complex is firmer. RBOB's up about 370. Heat's up just over 210 right now. So really much firmer tone here. You know, I think the big reason we've seen some of this turnaround here in crude prices after we kind of touched down around that $47 a barrel area. We've gotten some positive economic data out, some news out of China here, a little bit better manufacturing data, some decent news coming out of Germany here. And that was in spite of API yesterday that was showing a build in the stockpiles of a little over 4 million barrels. Today's EIA data came out. Traders were looking to see a build of around 5 million barrels. We actually saw a build of about 8.2 million barrels. So here we've gotten now 11 straight weeks of builds in the market. Something I've talked about in some of the prior posts here, though. In my opinion, it's not much of a surprise to the market anymore. We're seeing a lot of these builds in the stockpiles as companies are continuing to pull oil out of the ground, putting it in the stockpiles, but they're selling it forward in the futures market, and they're looking to lock in the difference. So I think for a lot of traders, this hasn't come of much of a surprise to see these builds. But I think at some point, we are going to start to see that scale back as we're going to be nearing capacity for storing these stockpiles. We're running at all-time highs for this time of year versus previous years in terms of our overall stocks of oil, and yet oil prices have been rallying. I think, on the technical side, the market's a little bit in neutral territory right now, but if we can break around the $50 to $50.50 a barrel area and take that area out, we could be targeting $55 a barrel oil basis the May contract. Now keep in mind, although I remain cautiously bullish on that market, there is downside risk. Again, we've got a lot of oil out there. We start to see some bad economic data. It could potentially cause a slump in oil. But you got to think about this, traders. We've gotten some bearish information out this morning, and yet in spite of that, the market is up over 3%. So I think, you're starting to see a little bit of a short covering rally, and I think the market has started to get a little momentum on it. Keep in mind here that, we were just down at around $44 a barrel here, and over the last several sessions, that market has been turning and starting to move higher, and I think you could see some continuation there. So if you'd like to discuss some potential trading strategies or ideas, please just feel free to reach out to me, and I can discuss with you different ways to potentially position yourself in that market.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.